What's good, everybody? Welcome to the closing beat. Hey, I got it right today. Hope you're having a good day so far today. Welcome to our stock market update. We are financial advisors, Jazz Wealth Managers, jazzwealth.com. If you want to check us out, we manage long-term retirement accounts, long-term investment accounts, retirement accounts, everything in between. We are SEC fiduciary registered financial advisors. We're really proud of the SEC part there. And so this is our stock market show where we just cover the good, the bad, and the ugly for the stock markets today, and maybe throw in a stat or two or something interesting maybe you didn't know before. Try to leave the overall opinions to the end, you know, if you're even interested. Also, the geeky stats and stuff, you guys seem to like it, but if for some reason it's no longer interesting, just let me know. I don't have to share those with you, but I got some good ones for you today. We also have a lot of good to talk about today. You got the markets higher by over 2% across the board, nearing 3% on the Nasdaq 100. The Dow was higher, added 618 points today. The S&P gained 61. By the way, the S&P, that is the second best day of the year for the S&P 500. And you got the Nasdaq higher by 208 points, nearing 3%. Now, a lot of that came right in the middle of the day from Jerome Powell. And in my opinion, the man owned it. He did great. If you're not familiar who he is the Federal Reserve Chairman. He is by far the most powerful man in the world if you take war out of the equation. But as a single individual man who has the most power, I will never forget my college economics professor saying, at the time it was Alan Greenspan, but he said, who is the most powerful man in the world? We all started thinking of like warriors and leaders of countries and stuff. And he said, no, it's Alan Greenspan, the Federal Reserve Chairman, by far the most powerful man. And that man is Jerome Powell at the moment. And he spoke today. Now, look, I'm going to just briefly touch on this because there's a lot of underlying things going on here. Trump has been beating up on this guy. Yesterday, I think Trump even tweeted that he was not even close to happy with picking him as the Fed chair, whatever. He had a lot of pressure. Will he raise rates in December? Will he back off on the rate raising? And basically Trump said, hey, if the market crashes, it's all your fault, man. This is all on you. It's not me. I'm doing great. And so Jerome Powell, you got book smarts over there and street smarts with Mr. Trump, the president. Jerome Powell just owned it, man. He totally gave the ball back to Trump, in my opinion, for the markets, whatever happens with the markets. Basically, Jerome Powell last month had said, we're nowhere near neutral. Now, neutral just means the point at which the Fed is happy with interest rates and they will not change them. So it had led a lot of people to think, oh my God, they're going to keep raising rates. We're just going to keep going here. It's going to hurt the markets. Well, today, in one sentence, the man managed to move this market. And I tweeted it first thing this morning. One man has the power to move the markets today, and he probably will. Can you guess who it is? And I think a couple of you got it right there. So just incredible today what he said there. So to me, it signals that he's going to raise rates in December. He's going to do it. We all got to know it. That's the beautiful part about it. They let us know that essentially, yeah, that's still going to happen. But he changed the words to say that we are just below neutral, meaning he's saying, I don't have that much further to go until I'm happy with where interest rates are. So it led a lot of people to think, great, the markets can continue to grow. And so it was really good. Also, I think he learned a thing or two from old Jazz Wealth here, making complicated topics really simple. Because he used an analogy in a room full of economic geniuses and scholars. He used an analogy that's something like I would say, basically. He said, as far as raising rates beyond neutral or where neutral should be, he actually said, when you walk into a room filled with furniture and the lights are off, you slow down. You feel your way around. You don't just go plowing into that room like you know what's up. And so he actually used those words, and I thought, well, that's so cool. The guy's really got it down. He really calmed the markets and put the ball back on Trump to say, look, I did my part. Don't you have a G20 meeting coming up this weekend? If something goes wrong there and the markets fall, it's all your fault, bud. I gave you what you wanted. I'm going to raise rates in December, but I gave you what you were looking for. So there was a lot of pressure there. Would he back off as Trump was beating him down? And he essentially didn't back off, but put the ball back on Trump. I thought that was really cool. Now, before we get started here, I'm going to take off all the graphics. The markets have been up every day this week. It led me to think, hey, wow, we had a really weak start to the fourth quarter. What tends to happen when the markets have weak starts. So here we go. We're going to do this real quick. If this is not interesting, I'm sorry. Just let me know in the comments below. Here's the breakdown of the markets, right? So 1, 2, 3, 1, 2, 3, 4. Okay, so 4 quarters of the market. This is where we're at right now. We are at the halfway point of the 4th quarter, right? You guys all know what that means. I mean, I don't need to oversimplify that. We're at the halfway point. So the question came to me, I thought, when the markets start off weak in the 4th quarter, do they recover? Do they continue to sell off? Does it turn out to be a bad year, a good year? Give me some stats. And so here's what we come up with. The stock market has actually had the 6th, we went back 90 years to the Great Depression, 1927. Go back 90 years, the stock market has had the 6th worst start to the 4th quarter on record, right? So that's, out of the top 25 worst starts, because the rest of them were all either positive or really flat, this is the 6th worst. We actually have started off with a loss of 9.34% in the first half of this 4th quarter. That's just like 40 days, not even 40 days that we've started off that week. So what we did is went and said, okay, what happens after that? Does the market rally? Does it flatline? Do people just walk away? Or does it come back and rally? So here's what we came up with. Average gain was plus 2.77%. Did I get that right? 2.77%. What's that tell you? Even though things started off weak, a lot of times it actually recovered and went positive. How many times did it actually go positive? 78.26% of the time, the markets recover towards the average. Doesn't mean they're going to hit 2.77%, but it means that 78% of the time they went positive by some amount. The average was 2.77%. So I thought that was really cool. It lends credit towards the idea of an end of the year rally. Doesn't mean it's going to be true, but if you have to bet, you have a 78.26% chance of that happening. You're not going to take the other side. You may choose not to participate in the bet, but you're certainly, if you're going to bet, you're going to take the odds in that case. Now, we said we went back 90 years to find out that this was the 6th worst start to the first half of the 4th quarter ever. If you go back and look at all of the other years, the average gain, 1.61%. That's all the years where the first half of the 4th quarter started off either strong, started off flat, really strong, whatever it may be. So I don't know if any of that made any sense to you, but apparently starting off pretty good. Actually, I'm not even going to erase it. We're going to just move back on over to the deal here. So that's kind of my stat of the day, if that's something that you're interested in. Moving on here, we've got a lot to cover actually, so let's dive right into the mix. If you're watching us for the first time, look over here to the left, or your right, you're actually able to see the stock market performance throughout the day. Go about halfway through that chart. That's 5 minutes. Every 5 minutes, what's the market doing? If you go about to lunchtime, you see that big spike there, right there in the middle. That's Jerome Powell saying those words, which sort of contradicts what he said in October, or changes what he said in October, that they are just below neutral. That's all that anybody cared about, just below neutral. Truly incredible that a man can do that sort of thing there. So pay, obviously close attention to what happens going forward, as well as this weekend, the G20 meeting coming up. Can you imagine what could happen if Trump gets something done that's acceptable with the Chinese? Not saying they end the trade war, but if they work out some part of it, if they can seal like half of the deal or come to some kind of agreement, could you imagine what happens? Now think of the other side of that. What if they go meet, they have dinner, there's a big press thing and it's all exciting and nothing gets done? Could you imagine how quick we retreat back to where we started? So truly incredible day if you like paying attention to this stuff. Okay, on the screen, I did a couple things extra for you today. We've got the Dow here on the screen, back above the 200-day moving average. The blue dot that you see, this day right here, that's the start of the Thanksgiving week. So the Dow almost erasing all of the Thanksgiving week declines. A very sharp recovery, right? V-based bottom. Still in a downtrend, still chopping around, but almost recovered everything. I want you to see something else real quick. I'll just do it on this one and that'll be it. Look at about the average range here for the markets. If you're participating in the markets, you say prices have pretty much moved inside of this range, right? They've been stuck right in here. So if you were to take that view of the market, you all of a sudden go, wow, we really haven't got anything accomplished this year. Sure, the first part of the year was great. We sold off hard, we recovered, and now we've sold off again. But the bulk of the action has taken place right at the flat line. So if for some reason the markets do finish flat on the year with either a small gain or small loss, you kind of understand why. We've basically done that all year long. Anyways, stats sort of lean towards a higher end of the year. So that's that. Okay, if we go over to the S&P 500, you could do the same thing and draw these same lines right in here and realize that outside of a small window from late summer into the beginning of the end of the year, we pretty much have traded sideways inside of this range. Look, back and forth between like 2750 and 2650, maybe a little less. That's your range. So traders look at that and go, should I continue? Should I invest heavily into the end of the year? Am I going to miss something if I don't? Looks like it's all going to be, political type risk that you miss a rally into the end of the year. If you just look at the charts, so you just look at the overall performance of the market, you're not really concerned about diving into the markets here and because you might miss out on some big rally. So kind of interesting there, I thought. If you look at here, the S&P, it has officially erased all of the Thanksgiving week's declines. Remember the stats we did for the Thanksgiving week decline, how that never happens, right? That every day is a losing day. Well, all that's been recovered, so a little reason to be excited in the short term. If you look at the Nasdaq, same thing, recovered all of the Thanksgiving week's declines there. However, still very much in the midst of a downtrend, and that's going to be the real focal point. This always happens like this. Markets move to a known resistance area right before a major event. And so we've got the G20 meeting coming up. That's all going to sort of hit the markets later in the week, next week, or early in the week next week, unless something comes out before the end of the week, but we'll see. So there's your downtrend there for the Nasdaq 100. By the way, the S&P 500 sitting also at the top of that downtrend, right? So it moved all the way back up. Investors said, it's good enough. Like, why didn't we go up 1,000 points today? Why didn't we only go up 200 points? Why was it that much? Well, the answer is there was room for profit. Technical traders that saw that bounce realized they had room from here all the way up to here for a potential profit before things got a little questionable again. And so going into tomorrow and the rest of the week, if the markets settle here and don't do anything, I wouldn't be concerned, right? You'd just be like, oh, okay, we had all of our excitement, and traders need new information to get something either to break above or to start a new sell-off and continue this downtrend. So we'll cover it, of course. We'll be here for you. Let's go now to the individual sectors. So that's the broad-based markets. We always start there. Now we dive into the individual sectors. I want to start with healthcare. Healthcare was really strong today. A couple names really stick out to me. J&J, that added 2.25%, very close to the highs. And then the other one was United Healthcare, UNH is the symbol, broke out to new 52-week highs. Together as a group, they make up about 18% of the healthcare space. So obviously two big heavy hitters in the space. It continues to be, by the way, the healthcare space continues to be one of the stronger sectors in the overall market. Now, see all the geeky stuff we did back there? We're going to do a class in about 3 weeks going over all the data of every single sector of the market going back 20 years, nearly 30 years, to give you the stats. We'll do this for our customers. The event's on the website if you want to know. I forget the day. It's like 2 weeks from now. We're going to go through all the sectors and let you know what's the best way to invest if you could only pick one sector. What's the best one to invest in if you could only pick one but you needed the least amount of volatility. What's the best one to invest in if you could only pick one, needed the least amount of volatility, and still wanted to beat the S&P 500 returns. Well, we're going to go through all of it. So grab a glass of wine. Be sure to check that one out. Also, the recording's available for you there as well. Hey, let's talk about crude oil for a moment. Crude oil actually did dip to new lows there. Huge oversupply. This continues to be a problem. So numbers came out today, the inventory numbers that showed there was more supply than everybody had expected, and that it continues to do that. This is, by the way, the 10th consecutive report, come out every Wednesday unless it's a holiday, and then it comes out on the Thursday following the holiday, unless Monday's the holiday, then it comes out Thursday following the holiday. So sorry to confuse you. Anyways, The last 10 times this report's come out, supply has been higher than expected. So that's the 10th time in a row. Obviously, oil going to be weak on the day. If you go and you look at some of the news out of OPEC, if you follow that stuff, you can maybe set alerts to follow OPEC news over in Saudi Arabia or wherever you catch the news from. You saw their comments that they said, we don't know if we're going to cut production in our upcoming meeting. That's going to be a big market mover too. They said, we don't know if we're going to cut production, but if we do, we're not going to do it alone, right? So we need someone else to dive in. Come on, U.S., we need you to dive in and help us out. And so sort of some pre-meeting jawboning, I think, if you follow that sort of thing. That was really the only two sectors I had on a watch list. If you follow like the, let's go down here, consumer staples. Oh, it's not loading up for me. I'll have to type it in. If you follow the consumer staples, there you go. They ended up higher on the day, but they did lag behind. A lot of stocks in that space. They've been strong lately, so some of them took a little bit of a break today. Naturally, the excitement was elsewhere, so you can kind of understand. If we go to, what's the matter here? This thing's not linking up, man. If you go look over at Mexico, strong reversal day. It sort of hinted at that yesterday. Strong reversal day. That'll grab some attention if you follow the Mexican markets. And then metals and mining. I'll just go briefly through that if you're interested. I just noticed a quick sharp reversal in the metals and mining. So that's bottom pickers right there. A little short covering, but a lot of people trying to pick the bottom in that one. That was up 4% on the day. I just thought that was kind of interesting. So those are the different sectors. We can cover anything if you're interested in looking at something else. You've got Salesforce.com, one of the headline stocks today. Misprint if you look in the description, it did close above the 200-day moving average. I accidentally typed that it didn't close above the 200, but it did. That's a technically significant area there for them. They just blew it away. Earnings were great. Revenue was great. They didn't really guide forward all that exciting, but the CEO made comments that they expect to blow everything away. He was super positive, and he's a cool guy, by the way. If you ever get to watch the CEO of Salesforce kind of talk, he's a normal guy. He's like the Lagarde from T-Mobile. Just a normal dude that's out there, happens to be running a successful company. I like those people. No suit and ties. I mean, he dresses up every now and then. I disagree with him some on political stuff, but he's just a normal guy, man. And I love when normal guys get a shot to run something that turns out to be successful. So good for them. Everything looking good there. That also helped, by the way. Anytime you notice a stock that has a great day, your question should always be, where else is going to benefit from that? They call it a sympathy play. So if you look at something like Adobe, also a cloud-based product, right? CRM is big, Salesforce.com is big in the cloud space. Adobe as well, so a big spike of almost 7.5% there. Workday, that doesn't get enough media attention sometimes, but they were up 5% on the day. Also a cloud-based system and setup. They're very, companies that are trying to generate a profit from the cloud. Let's put it that way. That's probably the easiest way I could say it. So they did well. And Amazon, of course, is the king of cloud space. AWS, they were all over the place. 6% gain on the day, trying to work its way back above the 200-day moving average. Let's talk about some retail stocks because there was a lot of those in the news today. Tiffany broke down to new lows, down almost 12% on the day. This is the second decline, by the way, of more than 10% in less than 2 months. So a lot of weakness there going on on Tiffany. Look, they beat the estimates that Wall Street had in place for them. Revenue came in lower. Remember, we mentioned early, before this earnings season even started, revenue was going to be the focus this earnings season. So that didn't help. They missed on that. Sales came in lower in China. Now look, when the markets do fall, if there's any hiccup or anything in the market, it's going to come because of China. I'll just put it out there. I'll be like the guy on CNBC that puts something out there, and if it happens, he goes, I told you so. I don't like to be the guy that says, I told you so. I like to be the guy that tells you ahead of time. That's why we're so heavy on stats. But weak sales in China. The Chinese economy is, in my opinion, sort of running on steam, right? There's not a lot going on there. There's a lot of headlines that sort of get overlooked that are going to become really important. And watch what happens. When China starts to experience a little weakness, whenever that happens, they're going to go pluck all those headlines out, find the people that wrote those articles, and those people are going to get to be on TV because they claimed that they were the first to call that. Anyways, weakness in Tiffany there. Shares are down more than 10% on the year now. Again, second 10% down day in less than 2 months. That's not a good sign. Barnes & Noble added 5% today. They're still public. Barnes & Noble is still a place like that you can go to and hang out and read books. And so what was the guy's name? One of their executive chairmen, Leonardo Riggio, he filed some SEC papers sort of getting in line legally to say that he would participate in the sale of the company should it happen. It's sort of one of those, it doesn't grab a lot of attention, but it gives you another hint that these guys are looking to sell. Could it be Amazon that comes in and buys them? I don't know, but that's part of the deal or part of the rumors on the table. Speaking of Amazon, we talked about the performance of this already. Really cool. I tweeted this one out earlier as well. They are starting to sell this software that is going to look through your medical records if you want it to, or if your doctor lets it, or whatever company. And they are going to find and make recommendations for more efficient, effective ways to diagnose, right? And so I tweeted out, like, you know, doctors are going to love this, right? So they hate that. It's going to be a tough road ahead. But that just shows the steps that Amazon's taking with JP Morgan and Berkshire Hathaway. Remember, they have a team. They partnered up sort of to conquer the world there of healthcare space. And yeah, I wish them the best. Okay, Dick's. This is back to retail. So we've got Dick's. They beat on earnings. Revenue was essentially everything expected. They raised their guidance for the year, saying, hey, this is great. Things are going well. We expect things to continue to go well. Shares got about 2.5% on the day. They're holding near highs. That stock's actually, I mean, although it's chopped around, it's done pretty good in my opinion. And then finally we'll do Disney, because that's just coming out, actually about an hour ago. Disney raised their dividends. So if you own Disney shares, you're going to get 88 cents a share on this next payout. That brings them to $1.72 total on the year. So what do they say? Dividends of a total of $1.72 on the year. That's not too bad. And they basically, the CEO just basically came out and said, hey, growth, great, profits, great. We're going to pay some of that back to shareholders. The 88 cents is 4 cents more than what they were projected to pay or had previously said they were going to pay. So you got a little Christmas bonus if you own some Disney shares there. Anyways, what else? Anything interesting coming out here while we're chatting? Lazy Boy earnings, I guess, did well there. Stocks higher. Guess, yeah, they had earnings. They did well in China, not really anywhere else. So Guess shares are lower. Tilly's also lower by 10, well, almost 10. Is that 10%? Yeah, it's about 10, 11% there. Yeah, that's really all I got there for you as far as the individual stocks go. David Walter, the S&P is super easy to beat. Look at the Russell 2000, S&P small cap. Yeah, that's a argument that, some people say, you can't beat the S&P 500. I've done videos on that. I don't know where that came from, but it's 100% possible. Remember, the S&P 500 is a man-made index. So you theoretically could beat that by simply adjusting the index, right? If you know anything about volatility, speed, if you want to get geeky going into beta and things like that, yeah, of course you can, right? It's like no mystery. Anyways, what else do we have? You guys talking about some fees in there? Nice. Sorry about that. You mentioned something about Ford. They were positive on the day, just a little bit, almost 1.5% on that one. I think part of that had to do with, so if we look at like General Motors, small gain on the day. Tesla, I believe, was a small gain as well, 1% on that one. This goes back to the subsidies, right? So government's looking to get rid of the $7,500 subsidy on the electric vehicles. They only do it, I believe it's 200,000 vehicles that they even give the credit to. Basically, it's their way of trying to get back at GM. But, we'll see what happens. So Ford, not really big in the electric vehicle space. So if you had to move money into something when you were unsure, you probably move it into something that doesn't really participate in the political back and forth. Yeah, so that's big. That's about it. Cool. So yeah, if you don't have any questions, I'm good. I just wanted to share some interesting stats with you there. That's basically all I have. Great day for the stock market. Again, really interesting time, right, for stats and to be able to track that sort of stuff. We're going to get real heavy with that in our Wine and Wealth series because, in my opinion, when you have stats, the emotions drop. It's like a seesaw, right? The more stats you have to back up the decisions you make, look, it's a 78% chance of something happening, but it's a 78% chance of something happening. If it doesn't happen, you go, oh well, right? Odds were in my favor. Try it again next year or whatever if you're a long-term investor. If you're not sort of filled with that knowledge, the statistics, the understanding of what happens when other things happen, weird things, correlation between the dollar and gold. Imagine that. Yesterday, if you're a gold investor, you panicked a little bit, right? Until you realize the story. We covered it in this show yesterday, but if you didn't know, you would panic and probably make a decision that you really didn't need to make, or that really, wouldn't scare you. So that's all I have for you. If you have any questions, feel free to leave a comment below. If you like this show, do us a favor, hit the subscribe button. We do a lot of work to make this happen for you, and plan on continuing that. But I appreciate it if you hit the subscribe button. If for some reason you need help, not every one of you are going to need help. I always say this in the Doe Show. If you need help or want someone like us to help you, well, you know where to find us. If you're good at doing this yourself, you like doing it yourself, you have time to do it yourself, or you're just interested in doing it yourself, go down that road. Let's talk, right? I'll help you. I will still be a part of that. But I would never, ever, ever, ever suggest that someone that likes to manage their own investments go find some advisor somewhere and have them do it. Why? That's something you enjoy doing. That's like when people paint their own walls in their house. If you like that, you want to test it, you want to do it, roll with it. But if you're the kind of person that says, I hate painting, man, I'm not interested, I don't know how to get into the corners, I always hit the ceiling, well, maybe you get some help. So that's my analogy to leave you with today. All right, so enjoy the rest of your day. We'll be back tomorrow, of course, and we'll see what happens. It's going to be a lot of news coming into the rest of the week. We'll cover it all, and enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.